So I like that he's asking a question on how do I expand my means? And so there's one question you can ask, which is the impact equation. A, how do you impact more people? Or B, how do you more deeply impact those that you already serve? So if you're working within an organization, I would call that being an entrepreneur. You want to start having conversations around, if I can contribute more to the bottom line, can I participate in the upside? Money can be complicated. Let a nerd help you. We're here to demystify the complex nature of money by getting you answers from financial nerds and whiz kids. Welcome to Ask the Money Nerds, a weekly segment of the Wealth Labs podcast where we answer your most pressing money questions. Today we're going to answer questions. They're so important that I have the very intelligent elbow pads. So I already look like I know what I'm talking about in money and finance. So people are wanting to know about employer, benefits versus getting things on their own. There's questions about how to choose the right advisors or build a plan without having to use advisors. So I'm excited. Let's jump into this, Stolba.
You're like the Mr. Rogers of finance today with that sweater.
It's a good day to be in my neighborhood because I'm going to teach you about money. All right.
All right. Let's get into it. So the first question comes in from Charles. He says, what is the best way to put together a realistic financial retirement plan without relying on so-called advisors who have hidden agendas and sales?
Okay, well, this is somewhat hard for me to give a full answer because even in my answer, there's still people you pay, and one of those people could be me. So there's the full disclosure. But I think that if you go to wealthfactory.com/strengths, you can actually just fill that out, no charge, and it'll let you know where things are handled or where they're not handled, because it's hard to fix things when you're unaware, right? Because there's things we know are handled in our finances. There's things that we don't know, but we can be aware of. And then there's these financial blind spots that can really harm us because we're either doing things completely wrong or with misinformation. And I get it. A lot of times it's tough with financial people because they're compensated on commission, or their job is to set up a retirement plan where they get paid fees on that. And that's how I started. I just sold mutual funds and I sold life insurance and I got paid commissions on it. And, even when I wanted to do other things, I just found like 90% of the time I'm not even getting compensated on the things I'm talking about. So we had to create workshops and we had to create a tuition-based program that people can write a check for. But that's harder because people have to actually write it. Now it just automatically comes out of their account. They don't see it and it's out of sight, out of mind. So I think wealthfactory.com/strengths is useful. And if you buy our weekly publication Build, or if you were to buy our curriculum for wealth, you can do all the work on your own, but have guidance on what needs to be done, right? And so as long as you've got the time to go through it and you've got the discipline to go through it, the resources are there and you wouldn't have to use any financial planner, advisor, or wealth advisor at all. But I think start with the strengths.
Yeah. Now, if someone has a financial advisor and they're just curious, are we a good fit for one another? Do I want to keep this person around? Do you have any questions that they could ask to start the discussion with the person?
Well, I want to be really careful. Some people have really great people on their team, but they're expecting those people to do more than they're actually qualified to do. They expect their financial planner to also operate as a tax strategist, which may not be the case, or an asset protection person, or an estate planning person, or, a real estate person. They have their certain expertise. So you want to utilize them in their expertise and not get outside of that expertise. That's where you want to build a more comprehensive team that communicates with one another, that operates as your advocate. So that's really critical. But the questions to ask is who do they usually work with? What are the best strategies that they employ? Which things do they have bias for or bias against? Because I'm very biased against the stock market. I think it's been overhyped and overinflated and over-relied upon, and it's let a lot of people down. So if you're a huge fan of the stock market, I'm probably not going to be the very best person to listen to, but I'm also not an investment advisor. I don't sell mutual funds. I don't sell stocks and bonds. I'm here to help people maximize their cash flow. So there's questions on the tax side, wealthfactory.com/tax, where we give them guides on how to ask and find out if they have the right accountant. So it just has to do with has their plan been made personal? Does their advisor know who they are, what their objectives are? Are they economically independent? Have they paid off high interest rate loans? Do they have the right credit score? Have they maximized their tax savings before they're funding these other things? If they're a business owner, have they really invested fully in their business before they're investing in other businesses they know nothing about, in boardrooms that they've never been in, with fund managers that they've never met? And so a lot of that becomes highly transactional. And so, it's really looking at what is a comprehensive plan? How do you get that plan done? What's that person's expertise for that, and who can they collaborate with or introduce you to if it's not within their expertise?
Okay. Ready to switch gears a little bit?
Let's go to another question.
That was a great question from Charles, by the way. Next one on from Quentin. Quentin says, hey, I'm a big fan of yours.
Well,
Boom.
Awesome. Like to hear that.
He says, I was wondering why someone should get their own insurance policy and not have one from their employer. What are the pros and cons in doing this?
It depends on the type of insurance that we're talking about. Most people, they're not getting car insurance, homeowners, and liability from their employer, although their payroll service company may offer discounts and stuff that way. Mm-hmm. So that could be useful to get discounts. When we look at disability insurance, if you ever plan on doing another job in the future, that disability insurance, you have to make sure it's portable. Like, will you be able to take it with you? In most cases, it's no, because you might be changing careers altogether, and now you have to re-qualify based upon your current health condition. And that might be different than when you first got the policy. So if you have an individual policy, you have a lot more portability and control over it. Life insurance is really important because sometimes employers give life insurance and there's aggregate rules. So let's go way back to September 11th. One of the companies that was inside of the building hit aggregate limits, meaning that there's only a certain amount that it would pay out for an entire company. So those people that were the beneficiaries got less than they thought because it had used up all the limits because there were so many people that died together. Now that's not happening too often, right?
Right.
But if you have an individual policy, you typically aren't going to have those aggregate limits. You can also convert it to a different type of policy. You're not just stuck with one type because there's convertibility and there's portability. You can take it with you. You can change it to a different policy. And that's where I'd go to like cashflowbanking.com because they're independent. They can look at all the different companies out there and, whether term insurance is the right thing for you right now, or maybe it's a different type of policy. Even if it's term now, you might want to change it to a different one later. And if you're not with your employer, a lot of them, you can't make that change.
Yeah. So someone who's looking at getting insurance policies for themselves, let's say disability insurance, when do you start looking at getting a policy on your own? Is it too young to do it at 18? Is it too late to do it when you're 50?
Yeah, as soon as you have income that's coming in and you're concerned about legacy. So let's say that you're married, then a lot of people are already thinking about, okay, well, I just want to make sure that if something happens to me, we'll be okay. Mm-hmm. When they're an individual, they don't think about that as much. But disability is going to impact the individual. And one of the stats I've read is that you're 3 times more likely to become disabled rather than prematurely die before 65. Because disability doesn't mean quadriplegic and paraplegic. Yeah. A lot of times it means you have a short-term illness or you get in an accident and you recover from that. So individual policies are usually a lot better contracts than group policies. Group policies have way too many exclusions. I mean, this is why people are frustrated with insurance companies, is because they're in the business to make a profit. And a lot of times it's hard to get that money from them. Mm-hmm. So you want to actually have a policy that you know is going to work, that you know what the provisions are, and that you can do something with. So that was a harder policy for me to buy, was disability. It was probably the last insurance that I bought because I didn't want to think about being disabled. And I thought, I'm just wasting money. But the reality is, if I were disabled, this would be one of the more catastrophic things that could happen to my legacy or to myself. And now with Amazon, I just buy more stuff when I'm sitting at home all day versus, when I'm out and about and recording podcasts and things that way.
You ready for one more?
Yeah, let's do one more.
So this question came in from John, and John is wondering, what are the first steps I should take in generating additional cash flow as I try to become financially independent? I know there are a lot of people who are watching the videos who they don't own a business. They're just trying to figure out this financial game and how they can improve it. And so where does someone start?
Well, there's a formula that we shared in the 5-Day Weekend book. And the formula is begin by making more money. A lot of people are trying to invest their money, but that's actually a few steps down the road. The second one is, as you make more, figure out ways to keep more of that, whether that's saving on, from the IRS or interest that you pay or investment fees that aren't performing or insurance costs, and then grow your money. So I like that he's asking a question on how do I expand my means? And so there's one question you can ask, which is the impact equation. A, how do you impact more people? Or B, how do you more deeply impact those that you already serve? So if you're working within an organization, I would call that being an entrepreneur. Mm-hmm. You want to start having conversations around, if I can contribute more to the bottom line, can I participate in the upside? That's a completely different conversation. Mm-hmm. And if people start thinking that way and they start operating that way, they can more clearly swing at pitches that they can hit, right? Like what's going on. Yeah. The other thing is you've got to invest in yourself. You've got to increase your skill sets. You've got to expose what you're very best at and continually invest in that so that you're not complacent or you're not just expecting someone to do it for you. There's things that you could do without even writing a check for that, which is a daily ritual. Get up in the morning, do exercise, education, and enlightenment, the 3 E's, or body, mind, and soul. So if you start the day that way, you kind of put on a shield of abundance, right? And it pings scarcity off of you. It helps you think more creatively. You can go to wealthfactory.com/solution, get more clear about your soul purpose, get more clear about value creation. But if you want to make more money, the main thing is you got to learn how to deliver more value. And so how do you deliver that value? That's the big question. And what is the most valuable things out there? What are the problems you see you can solve? What are the solutions that you can bring to the table? How can you serve more? And if you get caught thinking time for money, or someone owes you something, or you just want to get a raise because you've spent time there, it's not about time and effort in today's economy. It's about production. There's 70% of people out there right now with some side hustle, earning an income on the side. So there's plenty of things you can do, whether it's using Turo, an app that you can rent your car out, or Airbnb and renting a room out in your home. Or like I see people getting so much more resourceful. Or remember the interview I did with Brian Page where he talked about he just went to landlords and said, hey, why don't I rent this from you? I'll get you your full payment and I'll split with you above that because we'll just Airbnb it. And then all of a sudden he created this huge amount of money out of nothing. He didn't have money to make money. He just got resourceful. So we've got to get way more resourceful. We've got to think value creation is the key, and we've got to invest in ourselves to figure out how we deliver more. And when we do, that's how we make more money.
Yeah. And the great thing is we live in a day and age where we have the internet. I love the internet. Anybody can go and start a business, get a social media account going just to get started. You don't have to be perfect. Just put something out there, see what the market catches, pivot and move forward and see what you can create. But just staying in a place where, someone's giving you a 17-cent raise at an employer, there's a lot of opportunity out there for people to be resourceful, inventive, and be creative in what it looks like to make more income.
Right. And passion isn't enough. You could be excited about something that's not valuable to the marketplace. So we got to be really clear about that. But the more you really find a way that, in today's world, it's not like you have to have a bunch of money to get educated. I mean, we're finding major Ivy League schools putting out online courses. We're putting information out there on YouTube. We're giving links where people aren't having to pay. They're just engaging in us in our database so that we can stay in communication with them. But find those resources, implement those, make a daily commitment, and I think that'll be the key. So we've helped transform thoughts into profits today. Now it's about going out and building the life you love.